Hey everyone, welcome. My name is Rick Bosley. I'm your host for the Orlando Homeowner Show. This is our first episode, yet we're going to be with you every Wednesday from 12:15 to 12:45, specifically talking to the existing or the future Orlando homeowners. Today we're excited. We've got a good friend of mine and business partner and colleague. Been doing business with them for the last 10, maybe even 12 years when I met their colleague, Erb and Young, homeowners insurance and all types of insurance. So Taylor Young is going to be with us talking about the changes that the COVID-19 and this year has brought to the insurance industry. So stay tuned. All right, Taylor Young, can you hear us loud and clear?
I can, man. The intro video's got me fired up.
You all jazzed up now, right? We had to do it quick enough that we don't lose people, yet long enough that you're going, this thing looks legit.
Good music.
Hey, well, you are kicking off the Orlando Homeowners Show. If you've, obviously you know me, but if you guys have followed, I've actually been able to embrace the technology with the Zoom. This is a program called StreamYard. So if you're joining us on Facebook or on YouTube, you can leave comments right there. We'll see what your comments are. And we want to be able to answer any questions you guys have because we've got an expert in the insurance industry. So think of some questions, think of how it pertains to you. And Taylor, you and I have been working very closely here this year, sent a lot of business back and forth, taking care of a lot of our new homeowners and even existing clients who are looking for some new rates. And it's been quite a year and quite a change in the insurance industry. In fact, I've always shared with people when they ask, how has COVID impacted real estate? My answer is always the biggest thing it's impacted is insurance and how it's tightened up. Talk to me a little about that. If someone were to ask you, how has COVID or how has 2020 impacted the insurance world? Do you have a go-to answer? How do you summarize that?
You know, my immediate reaction is specifically there's more challenge outside of COVID within specifically the homeowners insurance or the Florida property market. So actually a lot of the pain that we're dealing with as consumers, you on the real estate side, me as an insurance agent, everyone that's involved in that transaction or part of the process is really from the last few years separate from COVID. I think what COVID's done is really added some gasoline to that pain. I mean, right now is a tough time for a lot of people. The dollar is just not going as far right now, meaning that, you know, savings for people is huge, specifically those that are out of work currently, furloughed, or have lost their jobs. So I think it's just thrown gasoline on what already is a crisis within the state as far as the Florida property market, if that makes sense, Rick.
Let's back that up then, because I've always correlated it with COVID, and the reason that they were getting tight was because some of the carriers went out of business. But you're telling this has been in the makes for the last 2 or 3 years. COVID and the forbearance and the economy has just exacerbated and added gasoline. Talk to me about that. What's happened over the last 2 or 3 years that has led us to this? And then we'll talk about what this is. What's exactly changed?
Yeah, there's been a few things, and we say the last 2 or 3 years, but it could really date back to before that. And what it comes down to in its most basic form is the inability for these Florida property insurance companies, homeowners insurance, for lack of a better term, to drive profitability. And you say to yourself, like, oh, insurance companies, you know, profit, you know, that should be something that as a market, it's healthy for these insurance companies to turn a profit. And when they don't, ultimately, we feel the pain as consumers. And a lot of what has driven that lack of profitability over the last few years has been litigation, what we would call non-catastrophic water losses, meaning small water damage claims that turn into a litigation incident. And the way that the legislation is written, it incentivizes attorneys to file lawsuits, maybe in questionable situations, to where a $10,000 water loss ends up turning into a $100,000 water loss. And it costs these insurance companies, obviously, money to fight that litigation. And they end up settling most of the time. And there's a cost to that. So when you multiply that over an entire state, especially in the areas like Miami-Dade, Tampa, Orlando now is a big challenge as far as litigation is concerned. those non-catastrophic water damage loss, that comes right out of the insurance company's surplus, meaning they don't have insurance for those type of losses. They have insurance for catastrophic events, which is called reinsurance. Go ahead, Rick.
Well, I was gonna say, so they've got their reserves. We pay a premium, and they're hoping that they can collect enough premiums that any payments they make are going to still let them leave with a profit. And so it's almost that you're hedging your bet. You're taking a gamble. As a homeowner, my insurance right now is $1,800 a year. And my goal is that, from hedging the bet aspect, that I will pay you $1,800 a year. And over time, when I need you, insurance company, you'll pay me back. And I can at least say that was well worth the $1,800 to have that, right? We talk about being self-insured. We talk about catastrophic is that $10,000 hurricane or roof leak, or there's a flood and it's destroyed my entire flooring and kitchen. But from what I'm hearing from you, there's been an increase in the litigation where 10's turned to 100,000. What is that correlation? Where did that come from? Why did that all of a sudden start, and why did it catch the insurance companies by storm?
Yeah, there was reform in 2019 to cut down on what's called the assignment of benefits form that was used by a lot of contractors back in the day. It's still used, but less today since that reform. But the assignment of benefits, essentially what you do is, let's say you have a loss or a questionable loss. Let's say your roof needs repair or you find a leak, whatever it is. A contractor comes out, they say, hey, we'll take care of it. You sign this form, and this will give us direct access to your insurance company. So, Mr. Customer, you don't have to worry about this. We'll work directly with your insurance company to get this solved. And as a consumer, it actually is a good idea in theory, right? You go, okay, yeah, I have a job, I have a family. I don't necessarily want to be dealing with the insurance company. So yeah, Mr. Contractor, that sounds like a good idea. But ultimately what that form is it signs away your rights as a consumer over to that contractor. So they are now in the driver's seat to negotiating estimates back and forth with the insurance company. And where that becomes a problem is if there's not incentive for them to actually make you whole again, if there's not incentive for them to operate with speed to be able to get you back up and running, their incentive lies with getting you the most amount of money, which ultimately makes them the most amount of money. So for a claim that they could probably get done for $15,000, there are certain contractors, and this isn't every contractor, of course, and it's not every attorney, right? Just like it's not every insurance company, but there are certain contractors that will drag out the process and send unreasonable requests for estimates to these insurance companies that ultimately the consumer sitting there like, look, I just want my roof fixed. I don't care whether it's $100,000 or whether it's $20,000. I just want to get back to living. And that drives up the cost because there's more people involved, there's more time, there's more back and forth in that claim. So that's one thing. Assignment of benefits is a big buzz term.
Let me dive into that a little bit.
Yep.
And this is just you and me talking, right? So we didn't prep, and I'm going to just throw some stuff out there. We had a listing, and she was an out-of-state seller. So she's got this vacant property, and the neighbors across the street got a new roof, and the guy gave a phone call, dropped a card, and his roofing prospecting was, we will fight for you on your behalf. You don't pay a dime. And they negotiated his rate, they negotiated the adjuster's rate, they negotiated the copay. And so I got a brand new roof, $0 out of her pocket, when she states and shows the invoice, it's a $45,000 roof, when all day long it's a $25,000 job.
Yep.
Why did the insurance company say yes when they know all day long it's not a $45,000 job?
Because to fight that and show that it's a $20,000 or $25,000 job is probably going to cost them $75,000 in fighting it. And they say, hey, rather settle, get this claim closed. Obviously, if you fight something too, you have an unhappy customer. And when you have an unhappy customer, they make it known, and all parties are affected. So it's kind of this balancing act, right? Because if I take my insurance agent hat off, right, I want insurance companies to pay claims, right? Like if somebody has a loss,
your client's happy with you.
Absolutely. If somebody has a loss that's covered, I want them to pay quickly, and I want them to pay in full, right? But then from a macro standpoint, with the situations that you bring to light, a part of you goes, well, as consumers, we don't want them to pay every time if they don't deserve it, because that creates a problem, which ultimately is going to drive rates up. And me as a customer, I'm now going to be paying for these borderline fraudulent claims.
Well, and And so I bought my house last year, and it was a 16-year-old roof. So at the time, it was fine. We knew it was not in great shape, yet it was in good enough shape to pass all inspections and appraisals. And knowing that it was common for hailstorms and hurricane, we said, let's give it a year, and let's see if we get hail. Let's see if we get hurricane. Let's see if we go get an insurance roof. We were kind of playing the field a little bit. We actually, after my client got that roof, I said, come on over. And he says, you've got legit hail damage. Why we didn't get a new roof is because I didn't own the home during the hail damage. So that's one aspect. But when he said, we will do everything on your behalf and you just give me carte blanche to do it, I'm going, sweet. That's exactly what I want, because this is what you do for a living. I sell houses for a living. You go do you, I'll do me, and let's all be happy.
Right.
Now, hindsight 2020, that's actually adding to the problem of the strict insurance is coming down.
Yeah, and of course, right, in a perfect world, in theory, that works. Unfortunately, human nature, the way the incentives align and some people operate within a system leads to, problems, and that's systemic. And another thing you mentioned, that's assignment of benefits. And there's actually been a decrease since the 2019 reform in the use of assignment of benefits. And so that's good news. But the other elephant in the room is the incentives for some of these attorney groups that just tee off on insurance companies. Hey, look, sometimes it's necessary for an attorney to get involved. Like, you're not going to hear that from me. Not all attorneys are bad. Not all lawsuits are ridiculous, right? Like, I've been in situations to where I've been very frustrated with the insurance company, and me as a consumer would absolutely hire an attorney. So don't get me wrong. I'm not playing the insurance side.
When it's needed, yeah.
But the way the incentives are aligned, there's one-way attorney fees and there's multipliers to meaning if an insurance company offers the consumer $20,000 for a roof and they fight that and they hire an attorney and they come back and they say, you know what, you should have offered $20,000 in $1, right? Like, I believe it's only got to be $1 to where now that insurance company is not only responsible for the loss, but they're responsible for the attorney fees for that litigation, and that could be multiplied, 2 or 3 times those attorney fees.
And they're liable because it's written that they are responsible to pay the claim. If you fight what the claim is, the non-prevailing party has to pay all legal fees. So
and it's only a one-way deal, right? So if the plaintiff loses, right, if they come back and say, hey, look, it was $20,000. We actually think we can get this done for $19,000. The attorney's not paying the insurance company's attorney fees, right? Only, right? And that's the problem. There's no downside for lawsuit. There's no incentive that says, hey, is this really a reasonable lawsuit? Because I could have some discourse if this isn't held up.
So that's increased. If you're watching this right now and you've got comments, I'm curious, drop in the comments, when is the last time you've reshopped your homeowners? Because Taylor, you and I talked about this, going, rates are always changing, things are always changing. As we sell houses, some things have changed specifically this year. And I'll go over it and you're going to see if yes or add some. Aluminum wiring all of a sudden has become a bigger deal than it used to be. So let's push pause there. And it's specifically single strand aluminum wiring. Also, roofs over, is it 15 years old, are becoming a challenge?
It's even stricter. I would even say 10. We only in Central Florida and Orlando and surrounding areas, we probably only have 2 or 3 companies that will do a roof that's 15 years or older.
So when we get a roof on there, we ended up paying out of pocket. I've got a brand new roof. It's a 25-year architectural shingle. Yet in 10 years, my insurance company is going to deem that as, I don't know if I want to touch it. Essentially, they're hedging their bet. They're expecting a claim to happen for hail or storm or hurricane of a 10-year-old roof. Is that where it comes from?
Yeah, and I think it also comes from timing of there's a massive amount of homes getting new roofs in Central Florida. You could trace it back to the hurricanes in 04 and 05, where a lot of people got new roofs during that time period, and a lot of those roofs are becoming 15, 16,
Yep.
14 years old, to where now you have people that have aging roofs, and just like you approached it, right? Don't blame you. You're getting into an older roof. If you have a legitimate claim that can be paid by an insurance company and it's within the policy rights, like, you're probably going to try to file the claim. So, but if all at the same time, and we know how many roofs were replaced in 04 and 05, and a lot of those roofs were replaced without permit, potentially with contractors that are no longer in business. So there's some challenges with coming all of those roofs at once. And I think that's what these insurance companies are dealing with, because there's been 5 major storms hit Florida in the last, I don't know how many years. And for a while, the act of gods, they took it easy on us. We did not get hit with a major storm for many years. And so there's a factor that I could talk about that also, not only are the litigation challenges, but now it's a reinsurance challenge for these insurance companies because of those storms.
Yeah, well, and let's take a minute to talk to the existing homeowners, whether they're looking to stay put long-term or they're thinking about selling. What advice do you have to existing homeowners of how they can be better protected or save a dollar here, or just ensure that they are set up for success from the insurance aspect? What's some advice you can share?
The market's volatile, and it's going to be volatile over the next couple of years. So this isn't a plug for us, but I would say I think it's vital to work with an independent agent that offers multiple companies, because these companies' rates are going to fluctuate. They're going to come to go. We hear rumors about financial troubles for different companies almost every single day, and it's hard to predict the future in that regard. But if you're working with an independent agent, they can help navigate that cost for you. Meaning, if your current insurance company takes a $500 increase, you're able to make one phone call and, at least like you did, check out the marketplace. Is there a less expensive option? How could I get a less expensive option?
So randomly, the homeowner has been in his house for 10 years, who's been with the same company for 10 years, might get an increase in rates just because their roof is now a 13-year-old roof instead of a 3-year-old roof like it was. Are they going to randomly just get increase in rates like that from their existing? Is that going to happen? Yeah,
it's yes and no, right? So that's a little bit more micro. That's based on that individual homeowner's roof. But also the rate increase may come from the insurance company's not profitable from an underwriting.
From the neighbors making claims, and now they've got to increase their reserves.
Yeah, because they got to stay in business and make money, right? So the quickest way to do that is to charge people more and collect what they're paying out in claims and rates. And so sometimes it has nothing to do with us. Sometimes it has to do with your neighbors and the.
So when we see our neighbor getting a new roof, instead of high-fiving him and going, "Thanks a lot, buddy," now my premium's going up.
Yeah, thanks, man. No, look, hey, I'm reasonable. I know that stuff happens, and I want people to get new roofs. And new roofs are the biggest driver. It's kind of ironic because the best way to keep your premium down is to have a new roof.
I'm going to go into that in a second. Before I do, what's the best phone number for your company if people do want to shop around?
321 234 1690.
1690. So let me do this real quick. There we go. So if you want to get a hold of that and just say, where are we at? What can we do to get that? Let's see. We've got a comment here. Taylor, thanks for joining. Thanks for your time today. I'm an agent on Rick's team. So Georgette just joined the team. So with all the questions, these roof claims legit or otherwise that are being made, will this cause carriers to pull out of Florida completely? That has already happened. So let's talk about that, because now when we're shopping and I've got a new buyer, you're going, hey, I used to be able to do it with ABC company. Now all I have is A company. Talk to me about the companies that have pulled out of certain areas, pulled out of Florida, and how that's impacting just from a scarcity standpoint. Thanks for the question, Georgette.
Yeah, Georgette, thank you for the question. It's a good one. A lot of the major national companies pulled out of the state of Florida, over a decade ago. Nationwide, Allstate, their home carrier, State Farm. Some of them are back. Some of them are a bit more competitive than they have been. But for the most part, we've had a marketplace that is these insurance companies that you've never heard of. And a lot of them aren't pulling out of the state. A lot of them are going out of business. And so a lot of these companies are just what we would call domestic property insurers, meaning they only write homeowners insurance companies in the state of Florida or regionally. So we've had 4 companies in the last 8 months go out of business. We had one yesterday that was rumored to go out of business that just got a new financial partner that came in and invested money and bought majority stake to keep them alive. So every other week, it's one of these insurance companies that's being threatened to actually stay in business rather than, just pulling out of the state of Florida, if that answers your question.
Yeah, and I think it does. We've talked about it before of going, company A goes out of business, company B just absorbed and inherited all of their policies. Yet if they're policies that they don't like, they've got to actually increase premiums to cover the companies that they just inherited, right? Where that's where a lot of the restrictions, we've had buyers in the Maitland area or Longwood area, and it was literally a zip code away, but this zip code wouldn't approve a house for wiring that zip code did. I mean, so is that because just certain zip codes are creating more claims? So they try to diversify those claims a little bit?
It's macro data, and it also could have to do with the reinsurance they buy, right? And not to get too insurancy, but these insurance companies buy insurance, right, for catastrophic loss, for hurricanes and so on and so forth. They're required to buy a certain amount to operate.
They've got their own insurance.
Correct. So those insurance companies that they buy it from have restrictions. And so not only are those reinsurance, the homeowners insurance companies' insurance, not only are they way more expensive now that we've been hit with a bunch of storms, but they're also way more restrictive on the type of business that they will actually allow and or charge a certain amount for. So that in itself tightens the market to where insurance companies may just see macro data, maybe dictated by the reinsurance, but they may just close in a zip code because they say, hey, look, claims frequency in that zip code, it says right here that, average claim is X and the amount of claims is Y, that's above average. We're just going to close in that zip code and file for that. So that's happening a lot. So that as a macro is tightening the market, meaning less options for customers.
As a homeowner or a prospective buyer of a homeowner or realtors, is that public information, or is that just when we find the house, give you guys a call and say, how does insurance look in 32826?
That's a good question. I don't know it to be public information down to that detail, Rick. I would say, lean on your agent partner. Okay. Give us a call, and that's what we're here for, to navigate, because we work with those companies every single day.
Yep.
So we have that information real time, and we know the types of houses and which companies, are competitive, what's not, what'll take, what they won't.
Sure. Let's now talk to the homeowner who's looking to sell or thinking of selling, or the buyer who is shopping, right? Some red flags from insurance. Some things that I've had personal experience. Again, we talked about the aluminum wiring. Obviously, polybutylene pipes is still an issue. Even though many polybutylene pipes are not going to leak, as if they were, they would have done it by now. They've been there for 30 years, just polybutylene in general. So as if you have polybutylene pipes, it's the gray looking pipes, not the white or not the copper. Copper is no longer an issue, Taylor. Is that right? And I think you just muted yourself, but double check that. Copper is not an issue, but polybutylene is. Is that accurate?
From a general standpoint, yes, that's accurate.
Okay. Aluminum wiring, copper, 15-year-old water heaters. You guys won't write on a water heater. I've seen some water heaters in the upper 20s years of age, but insurance companies say if you're over 15 years, it's a good chance you're going to rust through the bottom and leak, and I don't want a water damage.
Yeah, and that's the kind of market, that's a very good example of what we're dealing with, where it's just these little things that did not used to be even questions or issues, they're tightening up on. And water heaters are a big one. So usually, 15 years, usually they like them newer in the last 10 years. And that's just across the board. So you have roofs, you have water heaters, like you mentioned, types of plumbing. And really the challenge where you see these types of plumbing or aluminum wiring, what it really is if you used to have 40 companies that would look at your homeowner's insurance, right? And maybe 5 or 6 of those would accept polybutylene piping. So you had 6 options, maybe they handled it a little differently. And the pricing for that 6 companies, that was your choice. Well, now you may have 2 companies or 1 company that only does polybutylene because of just the macro effects of the market. And so now you're at the mercy of that particular company's pricing. So it doesn't necessarily mean that they're raising rates because you're piping. It just means that there's less options, and the options you do have are taking rate increases for other reasons. And so you're kind of stuck with those options. So for people that are thinking about listing their house, first of all, I'd say call Rick. But
my man,
we talk about this stuff on a daily basis, and you do an unbelievable job on equipping homeowners with what they should be thinking about before they should be thinking about it. And I really appreciate that about you, because you're managing expectations, you're setting proper expectations, because they'll get to that insurance agent and they'll say, what do you mean? I didn't know this was an issue.
Yep.
So I would say, look, more updates are better. And there's probably some things that you're gonna have to think about that you didn't have to, meaning a water heater, that type of stuff. So that's just the market we're in, but you can help navigate it for people.
Yeah, which is frustrating for prospective buyers and existing homeowners. They're going, this water heater is fine. This thing's piping hot.
Yep.
It hasn't leaked at all. And they're going,
I just took a shower.
If you want insurance and you need insurance to get a mortgage and you need a mortgage to get the house, so get a new water heater.
Yep.
Rusty Moore says, what's up? So,
what's up, Rusty?
So there he goes. Rusty, shout out. We got about 5 minutes left. We have had some cases where you guys have found insurance companies to do like a 30-day conditional waiver. So it's got wonky wiring. It's got an old water heater. Buyer can buy it with a conditional 30 days that they will replace it and then get it re-inspected, have a new 4-point inspection sent over to you guys that say it's been checked. What I've learned is that if you have more than one, you can't get 2 conditional waivers. It's kind of like they'll give you 30 days on one, but not 2. Is that still happening? Is that still an option for people looking to buy or sell to do that 30-day waiver?
Yeah, it used to be more common. We used to be able to do it on roofs, except for during hurricane season. So people are still doing it, but again, it's just less and less companies are doing it. And so we always say that I wouldn't plan on it, but if we can get an exception made, there's still 1 or 2 companies that will still, do those conditional approvals, but it gets harder and harder every day. Usually what they want is some sort of contract or written statement that you've already selected the contractor, they've already bid it, and you're basically going to do it, not this empty promise of like, yeah, we'll redo the plumbing, but we don't even know who we're going to use, and it's going to take a couple months.
Well, and the step further than that is what's called that escrow holdback, right? Which lenders typically need 3 different bids. So you need plumber A, B, and C. And then escrow holdback says at closing, title company keeps it either from buyer's closing costs or seller's net proceeds. And so it actually the money never goes back to the consumer. It goes from title company straight to plumber. Therefore, the insurance company knows it's going to be moving fast.
Yep.
And escrow holdbacks are not impossible, yet an added difficulty for lending, because now we've got just another curveball for lending. So it really has been the most enlightening and the biggest change for me as a realtor of how to navigate and how to win bids, how to sell homes for top dollar. Says we're going to take care of all this stuff. So a buyer, especially at a first-time home buyer price point, who's doing FHA, they're probably not going to have an extra 10 or 15 grand to completely just update the house. So as a seller, if we can get ahead of it beforehand and now give them brand new repipe or anything else out there. And as we go through this, a couple minutes left, we will be doing this every Wednesday, 12:15, talking with a repipe specialist, talking with electricians, talking with home inspectors. So as you, the Orlando homeowner or future homeowner, really it's not even Orlando, because it's probably nationwide stuff. I mean, we're going to stay hyper local, but keep joining us and go ahead and subscribe to the channel and turn on notifications. Georgette says, State Farm already requires a 4-point inspection on homes 10 years or older. I've heard on several occasions that more carriers may be going in that direction as well. Tell me more about this, Taylor. What's the required for needing a 4-point for how old? What's the standard that we should be looking at?
Used to be 30 years or older.
Talk to us about that.
Yeah, 4-point inspection is an inspection that's specific to insurance companies that just has to do with the major 4 points of the house. The AC, the electric, the roof and the plumbing.
Yep.
And so it shows the overall condition and the last year of update of those major 4 points. Used to be 30 years or older. We'd recommend it every single time. Some companies didn't require it until 50 years or older. But like Georgette mentioned, more companies are wanting more inspections now. And 4 points in wind mitigations, even on homes, 10 years or older, are more common. So that's another thing to prep your buyer, your seller, is those inspections, even for homes that are 15, 20 years old now, may be helpful to allow them to free up an insurance company that wouldn't otherwise do it unless they have that inspection.
Perfect. And now if you're thinking of selling, know how old your house is, maybe call your existing broker or call Taylor over at Erb and Young and say, if I wanted to reshop right now, what does it look like? Because we're wrapping up here. But I did get my new roof. I paid out of pocket with a great company. We'll have the roofer on in a future show as well. I reshopped my rate, Taylor. And last year, I have a lower rate with a 16-year-old roof than I do right now, brand new, because of the premium increases. I was expecting and hopeful for a $200 or $300 a year decrease. Didn't happen. So it's definitely been strict. Know that. Make sure your lenders know that as you're getting pre-approved, because they're giving you total closing costs with that. So a lot of stuff going on. Taylor, is there anything that I did not ask you that you feel is super imperative to educate the consumers out there and the homeowners about insurance? I know we probably could have gone for another couple hours here.
Yeah, it's funny, Rick, because if we're having this conversation 2 years ago, and this has to do with your business too, what are we talking about, right? We're talking about iBuyers, we're talking about national lenders, we're talking about the Rocket Mortgages of the world, we're talking about Zillow, whatever it may be, right? There's a threat to all of us as local professionals that the industries are just moving towards technology. They're moving towards iBuyers. And I look at this market, and if I'm a homeowner and I'm looking to sell or I'm looking to buy, I'm looking to work with somebody like you. I'm looking to say, this is not a perfect market. This is not as clean as it maybe once was. I need a professional that is going to help me navigate it. And that's one thing I would encourage your audience more than ever. I think there's a need on a lot of sides of the transactions. It's not only, and you help navigate all those sides with the lender relationships, insurance relationships. So I just think, as this market is very challenging, we're consumers too, we're dealing with it too. But that also creates opportunity for local professionals that do it the right way, that educate themselves and have platforms like this to speak of, that they can really add a lot of value to you.
Good stuff. I appreciate that. And Taylor, I know you've been a trusted vendor partner, so happy to keep referring. If you guys haven't already, make sure you subscribe however you're watching this. If you see it later and you still want to comment, we will get notification. I can put you in touch with Taylor to comment there. Next week, we are having Dustin Owen, one of the co-owners of Waterstone Mortgage, talking about post-election is the last time that rates really saw a spike, first of the year. So he's going to give us his forecast of when we're going to stop seeing these historic low interest rates, and if we could expect that, talking about refinance and everything else out there. So Taylor, I hope you'll join us, because you can always add extra perspective there. And until then, thanks, Taylor. Appreciate you and everything you're doing for me personally, for my homes, and also in the business. Take care, buddy. And he froze right there. All right, we're closing out.